I'm James, and in this video I'll attempt to explain how T accounts work in less than 2 minutes. Start the clock. What is a T account? A T account is a visual representation of an account. Let's think about this. An account is a place where a business records and stores all transactions that affect a related group of items. Back in the day, transactions and accounts were stored in large books called ledgers. But nowadays they live inside computers. This is great and all, but it can be hard for us to visualize what the accounts themselves actually look like. So we use T accounts. They're called T accounts because they're shaped like the letter T. The account name goes on the top, debits go on the left, and credits go on the right. To help remember this, you can add a little DR and CR above each side. Now, let me show you how T accounts work. First, you should know that all accounts can be sorted into two main groups. We have normal debit accounts and normal credit accounts. At any moment in time, we'd expect to find the balance of a normal debit account on the left of the T account, which is the debit side. And we'd expect to find the balance of a normal credit account on the right, the credit side. A simple way to remember this is to use dealer. DEA stands for dividends, expenses, and assets. These are on the left of dealer, so they're normal debit accounts. That means they increase when we debit them on the left and decrease when we credit them on the right. LER stands for liabilities, equity, and revenue. These are on the right side of dealer, so they're normal credit accounts. They increase when we credit them on the right and decrease when we debit them on the left. Example time. Imagine that you run a mowing business called Lawn and Order. You start the month of May with $4,000 in cash. Cash is a type of asset, the A in dealer, so it's a normal debit account. That means your opening balance goes on the left side of your cash T account. On May 4th, you perform a basic lawn mowing service for a client and get paid $200 in cash. How do you record this? Well, the cash balance for Lawn and Order has gone up. Cash is a normal debit account, so we increase it by debiting the left side of the cash T account by $200. But hang on, in double entry accounting there are two equal and opposite sides to every transaction. Your business has earned $200 in revenue, so you need to increase the balance of your revenue T account. Revenue is the R in dealer, so it's a normal credit account. We increase it by crediting the right side of your revenue T account by $200. Make sense? Let's do one more transaction. On May 9th, you spot some damage to one of your lawnmower blades. So you pop to a local hardware store and replace it for $50 paid for in cash. This time, your cash balance has gone down. We know that cash is a normal debit account, so we decrease it by crediting the right side of the cash T account by $50. This new blade was a maintenance cost incurred by your business, so you need to record an increase in repairs and maintenance. Repairs and maintenance is a type of expense, the first E in dealer, so it's a normal debit account. We increase it by debiting the left of the T account by $50. Now let's say we've reached the end of May. How do we calculate the closing balances of all these accounts? It's quite simple. We total the debits on the left and the credits on the right. Repairs and maintenance had an opening balance of $300 and a repair cost of $50. So its closing balance is $350 on the left or the debit side of the T account, as we'd expect for a normal debit account. Now for the revenue account. It has an opening balance of $1,000 at the start of May, and the business earned $200 during the period. That means its closing balance is $1,200 on the right or the credit side of the T account. Finally, let's do cash. Cash had an opening balance of $4,000, a cash inflow of $200, and a cash outflow of $50. This leaves us with total debits on the left of $4,200 and total credits on the right of $50. To get the closing balance, we take the difference of $4,150 and place it on the side with the highest number, which in this case is the left or the debit side, as expected since cash is a type of asset which means it's a normal debit account. Now that you know how T accounts work, let me show you how to properly record transactions using journal entries. I cover that in this video right here. And if you're interested, I do have a cheat sheet on T accounts. It summarizes everything we just went through. See you in the next one.